Every day, traders and investors dive in to tackle the ever-changing markets to find opportunity. Futures Radio Show is your number one source for answers to the questions that all market participants want to ask. Veteran futures trader Anthony Crudele sits down with the most influential leaders and top traders in the industry. Now, here's your host, Anthony Crudele.
What's up, everybody? Anthony Crudele here, and thank you for tuning in for this episode with Ian McMillan. Futures Radio Show is sponsored by CME Group. They are the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world effectively manage risk. For access to free educational tools and resources for the active individual trader, please visit activetrader.cmegroup.com. For new show notifications, please subscribe to Futures Radio on iTunes, YouTube, Google Podcasts, Spotify, and Stitcher. Now, if you're enjoying the show, please leave a review on iTunes. This show is also sponsored by Trading Technologies, RJO Futures, and FTSE Russell. The Russell 2000 is a key benchmark for small-cap U.S. stocks. Be sure to check out the E-mini Russell 2000 futures symbol RTY and micro E-mini Russell 2000 futures symbol M2K. To learn more about FTSE Russell, please visit FTSERussell.com. Today I spoke with market technician Ian McMillan. I have to say this was a really fun and interesting conversation with Ian. What struck me the most talking with Ian is, as technical as he has a CMT, and his process is very technical. He believes that trading and technical analysis is more art than science. I really love that about our conversation today because as a discretionary trader who's very technical myself, I do believe that trading is way more art than it is science, unless, of course, you're a systematic or automated trader. Obviously, two different worlds. But in today's conversation with Ian, we really honed in on his process, which was very simple. You know, for Ian having a CMT, his process was super simple. He didn't get overly complicated with technical analysis. Two things that he really likes to do, and that's buy new 8-week highs versus buying the dips, and he likes relative strength. And in our discussion, he explained why he believes that trading and technical analysis is more art than science. We talked about how you should be who you are as a trader and as a technician, not someone you're not. We discussed adding to winners, holding winners, and getting back in after you get stopped out. Last but not least, we talked about mental edge. So without further ado, let me take you right to my interview with Ian. I'm interested in learning a lot about your background, your backstory a little bit. I know that you're a CMT, so we're going to talk about that too. And I think, probably let's just start there. I mean, so you're a CMT, and every time I really always talk to a CMT, because I think it's a great path for a lot of people that are interested in markets, is to go that way and to learn about markets and, I think it's the best proper education that you could get. I mean, obviously I come from the pit, but most of the people that I talk to about the CMT, I feel like it's the best education you're going to get about markets before you, begin to trade. That's obviously the best education, but why and how did you end up choosing to become a CMT?
So I would say why is because originally I was originally asked by a boss to sit for the CFA because they felt that would look better to potential clients, right? Because CFA is the gold standard, and it just was not me. It wasn't what I believed in. So I ended up going the CMT route, really for more of a professional, for lack of a better word, kind of notch in the belt, so that being involved in the industry, being on the buy side, working in the RIA, it kind of was just here. I kind of have studied this niche technical analysis, and this is this designation I have for it. So it was truly more of a resume boost than, at the time.
So let me ask you this. I mentioned that I think it's one of the best, if not the best, real education that you'll get about markets, because really I would say actually not necessarily markets. Maybe it is. I don't know what all the tests are like out there, but to me as a trader, I feel like it touches more things than anything else. Did you feel that, I don't know if you've done any other licenses or anything, but do you feel that it was the best education of trading?
It was. Now, I say that because there is nothing can replace winning and losing actual money.
Yeah, of course.
Right. I think as we know, as participants in the market, no CMT, no CFA, no three letters can really replace what wins and losses and green and red on your screen. Right. And we're talking big wins, big losses, small wins, small losses. Nothing can replace that. But from a technical analysis standpoint, I think the CMT does a great job at getting you in the right path, getting you set down the technical analysis river with the right tools, and a broad education on technical analysis. They even cover quite a bit of the behavioral biases, which I think is important from a sentiment standpoint. So yeah, I agree. CMT does a lot of good things for those that don't already have 20 years of experience, like you said, in the pits and the emotions that come with that.
Yeah, and for me, what I think of when I think of a CMT is like right away you're already plotting out, entries, exits, and you're able to manage risk because it's visual. I think a lot of people, when they come in and they learn fundamentals, they don't know how to manage risk. Like, right away they think that they know, oh, look at this says that the market should do this, but they don't have that managed risk mentality like a CMT would have.
Well, yeah, and I think that's a huge benefit of technical analysis, right? Because we're all going to be wrong, and at least this tells you when you're wrong. Versus, no one has bought a stock at a private equity or at a PE ratio of 15 with the idea of selling it at 17, because that's just, or you don't know that you're wrong on a stock because the PE ratio dropped to 13. I don't know if that makes sense, but there just really isn't anywhere to tell yourself that you're wrong with fundamentals.
No. It's like, any fundamental people I've had on this show where I've always been like, okay, well, how do you know you're wrong in a trade? And I've gotten really a bunch of different answers, but a lot of fundamental traders, what do they use to prove that they're wrong? Technicals. Funny how that works, isn't it?
Well, and I've heard the same thing. And a lot of these guys on the sell side that put out these price targets where they're watching charts I've talked to people that have worked at these investment banks and they've worked with these sell side analysts, and they're writing a memo to their boss, about the fundamentals, but they've got the charts pulled up all day on their screen. Because how many price upgrades come out, or new price targets come out the day after a breakout? It's uncanny.
It's amazing, isn't it? I know. And, I want to talk about what your process is, because on a day-to-day basis, you are what? Talk to us a little bit about what you're doing every day right now.
So every day, I would say kind of as I had mentioned to you, my process starts really at night as prep work for the next day. After some downtime from the markets of looking at screens from 7:30 to 4, review the day, review breakouts, up the next morning, kids off to daycare, back home. So we're looking at those setups, maybe looking at some other things that I didn't get to the night before, or things that I thought about as I was laying in bed. We jump into the next day. Usually I'm on the phone at 9:15 with my boss and the other analyst on our team. That call will go for maybe an hour. Then all day pretty much reviewing the same stuff, whether it's scans, some of the more complex scans that we run on our Optuna software, Then by 2:00, we're reviewing breakouts that happened that day to see if there's anything we're interested in or any changes. Trading at 3:45. We don't trade really till after 3:45 each day. And then we're taking a break and it starts all over again.
So basically, you are scanning all of the different products that you're watching, and you're looking for specific technical setups. I've already heard you talk about breakouts. I know that you like buying new highs versus buying dips, and I know that you like RSI. So talk to us a little bit about the technical process that you're looking for on a day-to-day basis.
So, yeah, we are looking to buy stocks that are making new highs. It's more of a behavioral thing. I would say now a breakout, the more times that price has touched a certain price level and then is now moving through it, I think that's a stronger breakout to us. We're also looking for stocks that are making new relative highs, right? Because we want to be buying things that are moving up more than the market. So you find a stock today like Abbott Laboratories breaking out to new highs. Relative chart, honestly, not that great. So that's something that we would pass on. So looking for new highs in stocks that are relatively strong compared to the broad markets, that's where we want to be involved. And then all of that is kind of filtered through a top-down process. So we, at the very top, we like being overweight growth versus value. So that means we like things like tech and discretionary, which means we like things like software and retail. And then, under software and retail, you start to bubble down to your individual names. So it's kind of this big filtering process.
So when you say you're buying new highs, is it new 52-week highs? Is it what?
New 8-week highs.
8-week highs.
8-week highs. I've gotten a lot of questions on why 8-week highs. I don't have any type of statistical there's no statistical advantage. I didn't run a big fancy back test that told me new 8-week highs or 40-day highs, however you want to put it. There's a couple different ways to look for them. They pretty much get you the same results. But, yeah, so new 40-day highs or 2-week highs, or 2-month highs, 8-week highs, 2-month highs. That's what we're looking for. I use 8-week highs because I don't have a great answer. It's just honestly what I've always done. It's just for years it's been part of my process. It kind of seemed like 2 months was a good general idea of being able to find these consolidations. So we like buying stocks that are in an uptrend, maybe have consolidated for a little bit and are now ready to take the next leg higher.
Yeah, I mean, look I'm the same way with some of the things that I look at. I mean, I don't have great statistical reasons for some of the things that I do, but I find ways to make them work because I believe in them. It's weird how that will actually carry more weight with me. I've actually tweeted about this, that if I believe in something, I will find ways to make money with it versus something that someone tells me, this just works 80% of the time, which really I've yet to see really anything that does over a period of time work that long. But right, yeah, I know, sure, right. But you get what I'm saying. So it's like because I believe in something and because I look at it and it fits within, I don't know, my eye, I like it and I just use it.
Yeah, no, I hear you. Just random things. I think with all the tinkering that we do as technicians, there is so much of it that's just. It's not science. It's more the art part.
Yeah,
you find things and you maybe alter them here and there, you just kind of find this process. And if someone told me that they bought 19-day high breakouts, I'd say, okay, that's cool. If that's,
totally.
If it wasn't working, I don't know why you keep doing it. So I assume it's working.
Well. There's a million ways to skin a cat, and what I also find interesting is that you're a CMT. You went through this technical process. Your daily process is very technical. It's very methodical, but you still use some discretion.
Absolutely. And again, it goes back to kind of that more art than science. There is, I mean, you can back test anything. And the CMT covers this a lot. They cover some of the best back testing techniques. I personally don't do a lot of back testing, if I'm going to be completely honest. It's more of just the feel of when you're in the game, how you want the portfolio. Like, we don't have strict rules on how portfolios are allocated. Sometimes we might be in a bunch of S&P, like at the beginning of this rally back in March and April. Like, we didn't really know what was going on. Was this sustainable? So we're kind of just crowded over in the S&P. So I think that there's so much of the technical side that is very fluid.
Yeah, I think you said it well. It's more art than science. I think that goes, if you're trading, I think that's, unless you're a systematic trader who's doing this purely through automation, I believe in that more art than science a lot.
Absolutely. And if you're a scalper, you're running some type of algorithm where you're looking to make 1,000 trades a day, I totally get that.
Yeah.
But for the way I view the markets and kind of the portfolio construction side, it's just how I see it through my eyes.
I want to go back to you going through the CMT course and talk to us a little bit about why, after you had gone through some of the things you learned, why this is the route you chose, doing the relative strength 2-month breakout highs.
So I guess to start back with why CMT is, I had worked at fundamental firms before, deep value, just really painful. Energy was cheap back then. Energy stocks were cheap. Look how cheap they are now. And the reason relative strength was, probably the biggest light bulb moment for me in my career of like, why wouldn't we be involved with things that are outperforming? You're never going to beat the market if you don't own things that are beating the market.
Oh, yeah.
It's just
I like that.
the way math works. It's just the way math works. And so looking for, again, like Abbott Lab, that's great. Abbott was a great breakout today. But from a relative standpoint, it's been underperforming for 2 or 3 months. So I don't necessarily need to have an allocation to that if I don't have a lot of confidence that it can even beat the S&P. So relative strength really came from, honestly, a desire to beat the market, not just to have some type of risk-adjusted return, but to truly kind of, I think it's the only way it works. I don't think anyone's, beating their benchmark by owning things that are going up less than their benchmark. And again, the 8-week highs, just a time period that I've kind of tinkered with and kept with over the years. So again, nothing too, they didn't talk about 8-week highs in the CMT or anything like that.
So it just comes down to, this is what was the most appealing to your eye, kind of like what I had said a little bit back.
It was, and it worked with my personality. I guess with, buying breakouts versus buying the dips, I've never had a knack for finding the bottoms and things. I just haven't. It's not a skill set that I possess. It's not not a way for me to get emotionally involved in a stock is, buying the term. And I've seen some traders that are just amazing. And I follow a lot on Twitter that, are, even though I'm not going to be involved in the same types of setups they are, some guys that are really good at it. But buying the dips has just Emotionally, mentally, not my thing. And I think you got to be aware of that at some point. What things don't fit, I think you've got to recognize how your emotions, how you react to things when you are in a different type of setup. Because we all try different things when we're getting started.
Okay, traders, we're going to pause for 30 seconds and we'll be right back. A question I constantly get is, what platform do I use to trade futures? Well, I use TT. They are the world's fastest commercially available futures trading platform. Learn more at tryttnow.com. RJO is a long-standing brokerage firm with personal broker relationships to help you learn and trade futures. To learn more, please visit rjofutures.com. A lot of things you're bringing to my mind right now about this is the first thing is when it comes to you with your strategy, the market's proving to you everything. Relative strength, those markets are leading, right? And then they're breaking out to 8-week highs. So you're basically looking at this, and it's really so simple and right in front of you. And I'm sitting there thinking about this myself, going, hey, the market showed me everything it needed to show me, Anthony. It's stronger relative to the indices. And guess what? It's breaking out to new 2-month highs. So you're not sitting there getting into all of these other technical indicators to try and find where to buy them. You're just going, hey, man, the proof is right there.
No. And, so for some of our relative strength rankings that we do on our ETFs, we cover about 330 ETFs. That's kind of our top-down process. But yeah, we're not. I'm just trying to keep it as simple because I can sit there and overthink things with the best of them. Trust me, I've been there. I've done it. I think we all overthink things from time to time, no matter how much we try not to. But even today, I was sitting here at 3:45 trying to decide. I was down to two stocks that I was going to put in the portfolio, and one of them was a good setup, but the other one was hitting new relative highs, new absolute highs. And I literally just said to myself, and I was on the phone with my boss, and I was like, I don't know. I was like, I'm not going to ever think this. And I was like, just send the trade, because it was showing me everything that I needed to know.
I love that. I really do. And it's a strategy that I've never really thought about, and it's, for me, I do a lot of mean reversion, and I do a lot of support and resistance. I wait for reactions. And to me, that just fits, once again, my eye, and that's kind of my art. And what I do is once I see something that I like, an area, through my indicator, it hits it, it holds it, and then, I go ahead and execute it. And let's talk about execution for you a little bit, because, okay, so we know that relative strength, we talked about that, your 2-month highs, you breaking out. Give us an example of how you would then work a stop. Right? Where are you wrong after you get in?
So I would say 2 daily closes below that initial breakout level. So let's say we break out, let's say the next day it fails. Now, depending something drastic, we're down like 15%. Yeah, I got to let it go. That's just a punch to the jaw that you got to let go. But so on the breakout, usually entering that day, or the next, or on the second day if it doesn't go too far. Because again, I'm not trading at 9:31 in the morning, so a lot of stocks will get picked up off the yesterday's breakout. So if I didn't get it on that day, which is kind of what our work starting at 2 p.m. is, that I do with our junior analysts, is looking for breakouts that day. If it's something I discovered that night, that I didn't, I'm not in it yet. I discovered it. It's on the list for tomorrow. So part of the prep work. Some of those can really go the next day. And for me, my process, I still wait till 3:45. There are exceptions to that we have made, but they're pretty few and far between. There's no rules around exceptions, but I would say maybe 5% of our trades are at a random point in the afternoon. And yeah, that's where I would know I was wrong. And then if it's new highs, I don't really do price target. I know that that's kind of anti-trading in a lot of circles, but yeah, I kind of, once they're out, I'll let them run. We'll get more into kind of looking at I will say this, to manage my emotions, I've been using moving averages a lot over the last year, more so than I used to, because I would get involved in a chart and it would run up really high and then it would start to roll over, and I would get out, but I wasn't really staying in to let it consolidate as well as I should. So we had the nice big win, and then 2 or 3 weeks later, it'd be shooting up again, but I had gotten out. And so using something like a 20-day moving average, like for me, if a stock is still below a 20-day moving average, even if it's down 7% on a day, but it's still in a nice uptrend, then I'm probably not going to let it go. I'm kind of going to let it do its thing. And a great example of that would be TSM. Yes, had a great run up Friday and Monday, got slammed yesterday, but for me, that's fine, being down 6%. I've got cushion there. And then today it got all those gains back, or all those losses back, I should say.
Yeah. So as you said, a lot more art than science.
A lot more art. Volume isn't really something that comes in too much. Buying a breakout on, above average volume is great, but it's not a deal breaker. So very simple, very simple. If the stock's going up, based on the laws of momentum, it's more than likely going to keep going up.
Well, in this current environment, I wish I could hold my longs a little bit longer myself. It's like with all the analysis that I do, I look at it and go, man, how many times I've been long. Well, I mean, I'm a day trader, so I really shouldn't say that. But for me, even like intraday stuff, when I have targets, a lot of times I'm covering them when they hit them, because it's the way I'm built. And, and you have to stick with who you are.
Well, and how many times have we seen the post in this recent rally the last few months, this post 2 o'clock fake, where they just crushed the markets after 2 o'clock? They did it yesterday. Horrible close again, and ripped it right back up today. It's for the intraday, I totally get it. Get in while you can, get out. Kind of that robber baron attitude. No one wants to give back a green trade.
You just got to stick to who you are. And like you said, I mean, and to me, what I'm really loving about your whole style and process is that, yes, it is more art than science, but you really stick with it. You really, because you believe in it so much that you're going through your technical process, and you're allowing everything just to be what it is. You're not fighting who you are.
No, absolutely. And I think there's a lot of things by going through and looking. So when you go through these scans, you start to see, like a few weeks ago, when all these home builders were starting to perk back up, so you start to see these groups move in tandem. If you can have a list of 200 stocks that broke out, and if 10 of them are, residential home builders, well, to me, a light bulb should go off and say, oh, and for my time frame at least, and say, okay, there's something here that we should be paying attention to.
So with it being an art, what do you consider your edge in your processing, your trading?
I would say an edge of, well, one, believing in momentum, and that, stocks that are moving in one direction typically continue moving in that direction. But I would also say your ability to use leverage when you find a strong trend. So if a stock's is working really well, willing to add to that, even if it's already up 10, 15% since your entry. And I would also say the willingness to buy back a stock that you got stopped out of. which is really hard to do. The buying back a stock that you were recently stopped out of, for some type of failed breakdown or, it happens to the best of us more than any of us would like to. But I have found, and when I have had the cojones to do it, I have found that buying back in, as if we get back above that breakout, my back to where the initial buying price was, that same breakout area, that those stocks can really keep going. It's an emotional, it's hard because how many times have we all gotten stopped out and those things just, 2-3 weeks later, it's 20% higher. And you got shook out. It's the worst. And I'm not saying that every time I get that I get stopped out that I buy back in. It's certainly, I don't have any hard or fast rules around that. Being willing to do it is a pretty big mental hurdle to get over. And if you can teach yourself to, or I don't know if teach is the right word, but if you can build up the confidence to do that, I think that's a big feather in your cap. And I am by no means an expert with it. It's something that I think takes years of willingness. It's hard because once you get burnt by a stove, no one goes back and touches the stove, right?
Nah, you don't. And those three things that you talked about are adding to winners, holding winners, and getting back in after a stop out. For me, adding to winners is a natural trait of mine. I love pressing, which has got me into a whole lot of other problems, but I've learned to manage that one. Getting back in, also never been a problem for me. Just one of those things. Naturally, I just kind of move on and I get back in. That's the overtrader in me. But holding winners, I'm 21 years into this, and I got to tell you, and I talk about this a lot with a lot of my friends, I struggle so hard to hold winners. I've moved into swing positioning trading this year, and I've done them in the past. Of course I've done them. But this year I've made a true commitment with the addition of the micros to actually be able to hold some trades. And for me in the past, it's always been like, because what, and you said maybe you need to train yourself on some of these things, right? And maybe that's not the right word. But for me, it actually has been, because I've had to train myself with a small position to mentally get over wanting just to cover. Because having traded hundreds of contracts at one time and one contract, a lot of times I still treat them the same way. I just want to be flat. Mm-hmm. So that's who I am. And I want to I want to talk to you a little bit about the holding of the winners, because I got to say, if there's one thing that I get asked a lot and to talk about is like, Anthony, talk to people. I got to figure out, how do I hold my winners? I struggle with this. I'm like, I wish I knew. How do you do it?
I think it's, again, so this is where I've tried to put my emotions more on with the trend. So looking at the 20-day moving average on a daily chart. So, for example, I'm going to give you a great failed or a trade where this would have really come in handy. So earlier, just last month, great trade on Spotify. Caught the whole Joe Rogan news pop, all up into 195. Sold it. So big gain. We were in at 160. Sold it at 180 as it broke down, and there was no reason to sell it there. And look where we are now. We're up at it closed today at 262. And that was one where if I had just realized that I have cushion, this has run high, it needs some time to consolidate. And again, it's kind of this, I look at when I think about selling something, I look at myself and I'm like, Ian, you're still above the 20-day moving average. This is really justified for your time frame. So that kind of gives you it at least helped me with from a behavioral perspective of realizing where we are relative to a pretty short moving average. I mean, 20 days, I know a lot of people use like 8, 10. For me, 20 days is pretty short. And that's if you're above your 20-day moving average, it's a pretty strong trend. So that's one where I certainly could have obeyed maybe some of my rules more, but that holding winner is definitely hard because having a trade or a position go from green to red, there's nothing. I mean, let's be honest, there are worse things, but it's still painful.
Last question before we get into rapid fire today is I want to talk about, because we talked about the artist side of being a trader and an investor, and we talked about the mental side. Everyone knows I'm always talking about mental edge, statistical edge, and working on them. How much of your process is mental versus statistical, and how much do you work on the mental edge?
Oh, gosh. So, again, as I mentioned, not someone who does a lot of back testing, not someone who I don't go out and read white papers on quantitative trading or anything like that. So all pretty, outside of the setups, which are pretty technical, a lot of it is mental. And I think that this environment, March was by far the hardest thing that I've gone through. The V bottom, and just willingness to have conviction. I think that's something that I will probably always be working on. I think is conviction in, your beliefs about the market and maybe other things that are helping push the market in a certain direction. So, I think I'm constantly working on the mental aspects.
And that's something.
Because once you've found a process that works, like I have no problem finding stocks that are going up. That will never be a problem for me. Finding stocks that are moving higher, not a problem for me, not really a problem for anyone. But yeah, and then the concept of again, so portfolio management, things like that. It's a lot of layers of mental things. Dealing with, client optics, it's a huge layer, right? And so that kind of goes back into buying a stock that you've been stopped out of, or buying a stock back at a higher price that you were stopped out of. That takes clients kind of, it's hard for them to wrap their head around that.
There you have it, folks. You have a CMT who's got a technical process who works hard on the mental edge. Everyone knows I've been talking about this for forever. To me, it's so important, and I'm glad to see more and more discussions on it because it's essential as far as I'm concerned in the growth of any trader or investor. But we have some rapid fire questions next, Ian. Are you ready for those?
I am.
All right, everybody. Our rapid fire segment is sponsored by Trading Technologies. Trade the global markets with TT. They are the world's fastest commercially available futures trading platform. Now with integrated tools for advanced options trading, cryptocurrencies, and trade surveillance. Learn more now at tryttnow.com. First question for you, Ian. What traders influenced your career the most and why?
JC Parets. I would say that watching him and studying him is where I really learned the concept of relative strength. And he also took the time to meet me once at a hotel bar in Chicago when he had absolutely no reason to do so. I'm still a nobody, but he gave me a lot of confidence. He was an extremely nice person. I would say that now we are very good friends. So he by far is the person that I discovered back in the day on FinTwit where I was like, I think technical analysis is where I want to go.
What was one of the hardest things for you to overcome in trading?
Realizing that I cannot own everything that I see.
How has your trading process evolved over the years?
Relative strength, probably the biggest. I know I mentioned that, but yeah, relative strength, the biggest thing for me.
What is one attribute that you believe every trader should have?
Patience and willing to buy a stock that you were stopped out of for a loss.
Favorite book about trading?
How to Profit in Bull and Bear Markets by Stan Weinstein.
Best advice that you received about trading?
Best advice I received about trading, have a robber baron attitude towards the markets.
If you could go back in time and give the younger you a piece of advice about trading, what would it be?
Explore everything you can, different time frames, indicators, oscillators. I'll even throw in fundamentals on there, but try to keep it as simple as possible.
If you had an elevator pitch me your edge in trading, what would you say?
Momentum and willingness to use leverage.
If you had to pick a profession other than trading, what would it be?
I would be an architect.
Last question for today. Favorite thing to do when you're not trading?
With the 1-year-old, I will say spending time with him. 2 years ago, I would have said sports, but now it's certainly the baby and getting to hang out with him. Nice.
What sports? Are you a golfer?
Not a golfer. Big college football player. Or not college. I'm not a college football player. Big into college football. My wife and I are. Obviously NFL, going to lots of games. I used to be really big into the slow pitch softball, but not so much anymore.
Nice. Yeah, I know. I love sports, and it's the one good thing for me being down here in Florida now is golf year round. That's why I was asking if you were a golfer. I'm going to be hosting another Traders tournament once this COVID stuff is over, and that's probably not going to be until next year because I think this is probably going to last a lot longer than we think. I don't know about you, Ian.
I don't know. I think it definitely could. I think that companies are going to be very employers are going to be very slow with bringing people back.
Yeah. I mean, to me, 2020 is...
If they even come back. Even if... I think the next 5 years is going to be absolutely fascinating into regards to how kind of working from home or, how all this plays out. Is it going to be a productivity boost? Is it going to be a negative? I think there's arguments for both sides. So a big shift in our economy. I think that's caused a big shift in, some interesting stocks out there.
Yeah, I don't think we have enough history to know if working at home is going to be an uptick in what people are doing, performance-wise or not. I think that a lot of the businesses are
big social experiment.
Yeah, they're going to be evaluating that. But that's for a different show and a different conversation on a different day. Ian, where can people find you on social media, and give us a website to check out?
So you can find me at The Chart Life on Twitter, _chart_life. Website, you can go to clientfirsttaxandwealth.com.
Cool, man. Thank you so much. It was great to meet you, talk with you in person. Been following you for years on Twitter, and it was just great having you on the show today. Learned a lot. Thank you so much for joining me on Futures Radio Show.
Thanks so much for having me, Anthony.
Thank you for listening to Futures Radio Show. If you enjoyed the show, please leave a review on iTunes. You can listen to all of our episodes on futuresradioshow.com, iTunes, YouTube, Google Podcasts, Spotify, and Stitcher.